Good afternoon. Thank you so much for joining us for the 2019 Latin America forecast. My name is Abel Delgado, and I am the Digital Marketing Director for America's Market Intelligence. I'm going to be serving as the moderator for today and introducing the attendees, the presenters, and keeping everything moving here on track. Before we get started, we want to give you an idea of the structure of the webinar. We expect about 50 minutes or so will be dedicated to the presentation, and then another 10 minutes or so for questions and answers from you in the audience. Now, to ask questions, what you would need to do is look at the rectangular panel that should be on the right side of your screen. And towards the bottom, there's a small panel there labeled questions. You basically set your cursor on the panel itself and type in your questions, and we'll receive them. You can ask them at any point during the webinar. We'll compile all of them and try to get to as many as we possibly can at the end of the webinar. So in addition to getting questions from you, we're going to be asking you a couple of questions. These are basic poll questions that we like to do to get a temperature read of the audience and find out how they feel about the topic that we're presenting on, and it helps us develop future materials. The way poll questions work is that we'll announce them, and then the poll question will occupy the entire screen. You'll see the question and the different responses, and then basically there you just pick the response that adequately expresses how you think, and we'll be able to tabulate those results very quickly and let you know how the entire audience thinks about the particular issue in question. So before we go on next, we want to give you a webinar agenda, basically a summary of what we're going to be covering today. After introducing us to the company very briefly so you know who we are, we're going to be discussing Latin America in a global context and also offering a regional, political, and economic outlook. Then we're going to get into forecasting leading markets, followed by industry practice forecasts, in which our practice leaders are going to discuss 2019 trends to expect in a number of different areas, including payments, logistics, consumer retail, healthcare, natural resources, and infrastructure. Now we're going to do a little bit of introduction of who we are as a company. America's Market Intelligence basically specializes in market intelligence for Latin America. We've been around for the past 25 years, and we have produced something like 3,000 different projects for companies. And our work basically involves helping people find hard to find data and also providing analysis to help companies make successful business decisions in Latin America. So that's the work that we do, and part of that it involves forecasting to an extent, which is why we wanted to share some of the insights that we've developed for today's webinar. So now I want to tell you a little bit about our webinar presenters. First off, John Price is going to be the founder of AMI, and he is going to be leading us through the regional forecast and political and economic, and also the market outlooks for specific markets in the country. He's going to be followed by Guillaume Corpart, who leads our healthcare practice and will discuss 2019 trends in healthcare, followed by Lindsay Lear, who leads our payments practice to discuss payment trends. Then Diego Rodriguez will comment on logistic trends. And then finally, after that, we're going to have Mauricio Cardenas to talk about the consumer retail market for LatAm and what he expects to see in 2019. And then we'll finish off with an outlook as far as our resources and infrastructure in that particular sector. Now, that's led by Dr. Remy Piet, but unfortunately he couldn't be here today, so John is going to step back in and conduct that particular presentation. And let's move on again here. Now, this is a legal notice. I'm not going to read it. You can read it at your leisure. It's basically something that we have to satisfy the lawyers, but I think it's important for us to get to the material at hand, so let's move on from that. And that's going to bring us to a discussion of Latin America in the global context. John Price is going to step in to kick off this particular portion of the presentation. John.
Thanks so much, Abel. Actually, before I get into presenting our forecast of the region, we'd love to ask you, the audience, a poll question. So Abel is going to put up the poll question, but basically, many of you are in a position of leadership in a division and a P&L of the region. If you have an idea of how your business will do next year, if you've begun, this is the planning season, if you're looking at those numbers, we'd love for you to tell us. Of course, all the answers are anonymous. We don't know who they come from, and all we're going to do here is we're going to project once you answer those questions. Well, answer this question, we're going to tabulate and throw up our summary numbers. So 4 choices there. You expect your business to contract. You expect it to grow modestly from 0 to 5%, grow more aggressively from 6 to 10%, or grow even more, 11% or higher. So if you could please fill those in and give us a few seconds while we tabulate this. It's always interesting to hear from you, a pretty large audience, how you're anticipating growth before we get into showing you our analysis. Okay, so roughly half are looking at modest growth of 0 to 5%, and the remainder are almost all more positive than that. So this is shaping up to be a pretty optimistic year ahead. So that's very interesting. Okay, now let's look at our analysis. If you want to look at the next page, we are waiting for the screen of the presentation to occupy the screen. Right now it's just my face. I'm broadcasting from Buenos Aires today. Abel, there we go. Okay, so here is a US dollar-based GDP history and forecast. And what is striking, and no surprise to people, is how much it fell in 2015 and 2016. That was the laggard effects of collapse of prices in metals in 2013 and 14, and of course of oil in late 2014. And that put a real dent in the GDP. It took about $1 trillion of acquisition power away from Latin Americans over that period of time. We have been pretty flat since then, and certainly there was a setback this year with big depreciations in Argentina and Brazil. But what we are anticipating, and we'll obviously explain why, but what we're anticipating is a pretty decent growth over the next four years, in part because these battered currencies should strengthen, as well as more fundamental drivers of growth. Now, when we look on the next slide of how Latin America is faring versus the rest of the world, what you see is if you go back to the heyday of 03 to 013, when Latin America was living the commodity super cycle of high commodity prices and low interest rates, its growth rates were high across the board and ahead of Africa and on par with Asia. Now we're in a situation where commodity prices will not be reaching their record levels anytime soon, and the Fed and other sources of capital are tightening or raising interest, tightening money supply. So for Latin America, that is going to have a moderating effect on growth over the next 5 years, whereby Latin America will underperform other emerging markets and will be on par with the United States, Europe, etc. Okay, let's move on to the next. Okay, so what drives Latin America's economies? We've already alluded to this. So big part of it, because Latin Americans keep so much of their savings abroad, about 5 trillion, they borrow in dollars. And so to pay back that debt in dollars, they do that in a lot of South American countries through the export of commodities. And so the pricing of commodities, particularly metals and of energy products, tends to have a big effect. In recent years, the last 3 or 4 years, energy prices have been slow to rebound. That has been great for Central America, not good for Colombia, Venezuela, Ecuador, and Mexico. But the two are now moving upwards, and we see more and more firmness in the floor of pricing on oil products. Let's go to the next one. A lot of noise, of course, is heard every day about the U.S. economy and how well it's doing, and certainly very low unemployment is now beginning to lift wages in the United States. We also have to take into account that the labor pool in the United States is shrinking for the first time in 225 years. Those factors alone are making the business case for outsourcing of production to places like Mexico and Central America stronger than ever. Even if the political support's not there in Washington, the economic case for outsourcing is very strong. That's why we do believe that the new NAFTA will eventually be ratified, because it's in U.S. corporate interest to do so. And let's go on to the next one. There was what people refer to as a taper tantrum 2.0 this summer, when money traders went after the Argentine peso and the Brazilian real, and to some degree the Chilean peso, when interest rates were when it was clear that the Fed's policy of gradual increases, they were actually following through on. But if you look at the Fed rate in the last 20, 30-year history, you'll see that we're still at very low rates. So I think that the market tends to overreact in the short term to changes in the Fed rate, and then things come back to earth. The reality is that a lot of other asset classes, from US equities to emerging market bonds to emerging market equities, are going to continue to way outperform the Fed, and the Fed should not be crowding out these markets. And it takes a few weeks or a couple of months for people to realize that. But for that reason, we think that the longer or even midterm effects of a higher Fed are exaggerated at this point in time and won't turn out to be as bad as expected. Let's go to the next. There is a political dynamic, very interestingly, in Latin America today. Latin Americans have the lowest approval ratings of their political leaders anywhere in the world, with Michel Temer at 7%, just ahead of the elections. As a result, there is a general rejection of the status quo. It's not about moving right or left necessarily. It's about rejecting the status quo leaders, many of whom were elected as populists and leftists. And so they are the ones who are bearing the brunt of this rejection. But it would be a mistake to assume that Latin America is somehow embracing a very pro-business option. Because as we've seen in the case of Mexico, they're also willing to vote for a left of center candidate if he represents a break from the past. Let's go to the next. However, hovering over these political decisions is a fiscal crisis still in Latin America, prompted by the drop in commodity prices, which took a lot of tax revenue away from Latin American governments. And they still find themselves in pretty challenging fiscal situations. That limits what they can do in terms of spending. That limits policy decisions. So instead of public finance infrastructure, a lot of governments are moving towards PPP finance. So there tends to be a bit of more tolerance and embracing of pro-business policies. Again, not out of an ideological founding, but out of a fiscal necessity. Let's go to the next. What we do find when we survey, this is a survey done of Latin American business leaders, and as you can see, the drop in mineral prices and drop in energy prices really took a lot of the confidence away from these leaders, but it's been gradually building up with a few hiccups along the way. But you see a gradual positive trending, and that is no doubt underpinning some of the optimism that you showed in that first poll question. Let's go to the next one. So before we delve into a few of the leading markets and show you our analysis country by country, we'd love to ask you the next polling question, which Abel will put on the screen now. We'd like to understand, which market do you think will deliver the most total upside growth? So that's total dollar value growth to your business next year. And we are limited as to how many responses we can have. We can only have a maximum of 5. So we apologize for excluding some of the mid-sized markets in Latin America that no doubt will deliver part of your growth. But we've listed Central America as a whole together: Colombia, Mexico, Brazil, and Argentina. So we're curious to see where you see the engines of growth next year for your businesses. So we are just calculating those right now, and the poll responses should come up fairly shortly. We appreciate your expediency in answering these. So very interesting. Roughly close to half coming from Mexico, and a good deal of the remainder coming from Brazil and Colombia. So that's very interesting. That is going to somewhat mimic our analysis of these countries as well. So let's move on into the specifics country by country. Now, Mexico. Mexico's peso has been hammered for the last 2 years under the weight of 2 sources of risk, perceived risk. One, the uncertainty around NAFTA and how it would be renegotiated. And also,
there he is. John, we lost you for a moment. You want to start with the slide again because we cut out for a moment there.
Thank you, Abel. Can you hear me now okay?
Yeah, so far.
Okay, good. All right, so the Mexican peso was hammered for about the last 2 years under the weight of risks around the perceived or the lack of clarity around NAFTA and how it would be renegotiated on the one hand, and the 2018 elections, which long ago projected an AMLO victory. Now we have gone through two important threshold events related to those. We have a renegotiated NAFTA. It is still not ratified, and there's still some risk lingering there because it won't be ratified by the US Congress until a new Congress sits in 2019, which will have new members and probably, at least at the House of Representatives level, a Democrat majority, including some strong left-leaning Democrats that are expected to be elected, many of whom have an anti-trade stance. So there's still some risk there, but the important point is that I think the political leadership of Mexico and the United States and Canada are begrudgingly, but nonetheless, putting their weight behind this new agreement. AMLO is a president. He had a sweeping victory, not just of the executive branch, but his party also took the Senate and the House. We have not seen that kind of lopsided power in Mexico since 1996, just before Zedillo lost the House, control of the House in midterm elections. And so there is some concern that Mexico has placed a lot of faith in one party and one leader. And if you talk to the business leaders in Mexico since he was elected, they are concerned about what they see as mixed messaging coming related to the airport, related to infrastructure spending, related to downstream Pemex investments, related to the decentralization of Mexico's ministries. So AMLO definitely spent the last 6 months of his campaigning as a centrist. The question is, will he govern as a centrist? There are certain breaks on power that come from the institutions of the Supreme Court and the Central Bank of Mexico that limit any president in Mexico, and that's a good thing. But there's definitely some lingering uncertainty about him as a leader. Let's move on to Brazil. In Brazil, we are days away from most likely electing Jair Bolsonaro as president of Brazil. He leads in the second round of voting against Haddad with a 60-40 margin. So it would be a great surprise if he did not win. His electoral surge has also caused a surge in the Brazilian capital markets around key important equities, but also Brazilian bonds. And the reason that people are excited, I think, is more to do with not electing Haddad and not bringing back the PT to power in Brazil than it is necessarily a full embrace of Bolsonaro. What has aided Bolsonaro's market success is his seeming commitment to Paulo Guedes, the former investment banker who is his financial advisor, who is a classic neoliberal, who talks about the long overdue reform of the pension system, as well as privatization of Electrobras and Petrobras, the remaining state ownership of those assets. There is some degree of debate about as to whether he will continue to listen to Guedes once he is elected versus his more traditionally economic nationalist backing of the military and other advisors who are dead against further privatization of Petrobras. So we are not convinced that he is quite the neoliberal that his advisor, Paulo Guedes, would like him to be. However, if he is willing to take on pension reform, if he is willing to shrink government, these are both positives that are going to help bring in more capital to Brazil. Brazilians keep close to $2 trillion of savings offshore, and if even 10% of that money returns to Brazil, that'll be a big boost to the economy. So we're quite bullish ahead in Brazil. Let's go to the next. In Argentina, in spite of, I think, broad support, certainly amongst the political or the business classes, but even amongst voters in Argentina for Macri and his policies, the country was simply ill prepared for the transition that it undertook and it was beaten up by currency traders this summer when they saw a increasing Fed loosening its or tightening its tolerance of these kinds of looser policies by Macri and other leaders around the world, and the fact that Argentina didn't have enough reserves. So what we have now is a situation where he has to now tighten his policy, make it even more neoliberal to satisfy the IMF and others. But in doing so is driving the economy necessarily into a recession to keep inflation down. He has 1 year to show progress before Argentina goes to the polls again. Right now, he's running neck and neck against Cristina Kirchner in polls. And in a runoff, he has a slight advantage over her, but only by 2 percentage points. So it's going to be interesting over the next year to see whether his reforms will begin to gain traction and show the electorate of Argentina that they're on the right track. So next year's election will be crucial. In the meantime, foreign direct investment is going into the export sectors of Argentina, but holding back in the domestic sectors of Argentina. Let's go on to the next. In Colombia, Ivan Duque's election came with the support of some very conservative elements in his party who want to do things like throw away the FARC agreement. He is choosing a much more moderate path between those very conservative elements and a still strong political opposition. And so far, his early steps look very positive. As an example, in the mining, oil, and gas area, there's over 150 referenda being considered by 135 different municipalities in Colombia to stop projects in mining and energy. The Constitutional Court just passed a ruling 5-1, basically stating that those assets belong to the subsoil and therefore to the federal government's say, and therefore a local community cannot stop those projects from going ahead. Congress still has to pass legislation to give them some voice, but this is a huge win for mining and energy, and we're going to see investments moving along swiftly in these fields. So we're quite bullish with a gradual increase in oil prices and now a much better investment climate for extractive industries. We see Colombia doing quite well in the next couple of years. Let's move on to, I believe Chile is next. In Chile, Chile right now is suffering from slightly decreased copper prices, and they're responsible for 60% of their exports, so they're important. But Chile, better than any country in Latin America, is prepared with its reserve fund and its long history of very credible, sensible monetary and fiscal policy to weather the storm of a tantrum of the Fed, as well as low copper prices. So we see growth not quite at the levels that the right wings, the neoliberals in Chile would like to see, but nonetheless a good story in Chile going forward. And lastly, Peru. In Peru, of course, there is has been a political battle on now for the last 18 months since PPK was elected, leaving Keiko Fujimori a close second. Since she controlled the Congress, it became a duel between her and PPK's party. PPK was pushed out. And lo and behold, the then vice president was called back from his role as ambassador to Canada and has done an amazing job at gaining his own political stature. And now, of course, very surprisingly to people outside of Peru, Keiko Fujimori was arrested 10 days ago, and the release of her father was annulled, so he is also back behind bars. The question remains, will this create a path for political stability that allows the more than $10 billion of the money sitting on the sidelines waiting to invest in Peruvian infrastructure and other areas to move forward? That we have to wait and see. Regardless, Peru has a very strong footing with its mineral sector doing well and a still under-leveraged consumer buying large ticket items in Peru. So we're still quite bullish on Peru going forward. And at this point, I know that we're now going to turn to our practice leaders, but I think we have one more poll question to ask you all.
I just wanted to interject real quick because a lot of folks joined us a little bit later, so they may not know. Before we do the poll question, just want to let you know that you can certainly ask us questions. And we explained that very early on in the webinar, but we want to just sort of make sure that you understand how that works. The way to do it is if you look at the right-hand panel that you should have, that rectangle towards the bottom, there's a panel there for questions, and you put your cursor on there, and then you can just write in your question. So if you arrive late, that's how it works. You continue to ask them at any point in time that you want between now and the end of the webinar, and at the end of the webinar, we'll address your questions. So that's how that's going to work, and now we're going to launch our next poll, and we'll get that started for you as well, because I'd like to know what you think about another particular area with LatAm.
Thanks, Abel. We're curious to ask you, this is strategic planning season for a lot of our clients. We know that you're looking at the region. That's why we do our forecasting this time of year. And we work a lot with clients around strategic planning, both feeding them with intelligence, market studies, competitive analysis, but also, in fact, working with them, coaching them, helping streamline their strategic plans, which are often too information driven. So we're really curious to understand the kinds of challenges that you face with strategic planning in Latin America specifically. So again, we've provided a finite number of responses there. Is the greatest challenge lack of relevant market intelligence or lack of internal corporate support or expertise? Is there a lack of buy-in from your Latin American markets to the process? Are Latin American markets deemed just too volatile to even plan for? Or is Latin America's strategic planning as it is designed presently way too time-consuming, particularly of your senior level people? So once you give that some thought and answer that question, we will then publish the poll results. Okay, very interesting. So roughly a third of you are stymied by the volatility of Latin America as a region you can plan for, and the remaining 70%, roughly half of that, cite the lack of market intelligence as a debilitating factor. So those are very interesting numbers, and definitely coincide with what we've seen. In fact, we published a report very recently, last week, that is based upon some polling we did a few years ago, and it shows very similar reflection in terms of the numbers, but you can find that on our website and download it for free. Okay, at this point, we are going to jump into the practice presentations. And first up, I believe, is Guillaume, who's going to provide you with his forecast of the healthcare sector. Guillaume, many of you know, runs a healthcare practice, but also is owner and founder of his own firm, Global Health Intelligence. So Guillaume, pass it over to you. Thanks so much.
Great, thank you, John, and thank you for the wonderful introduction. As John mentioned, I'm Guillaume Corpart. I head the healthcare practice for AMI, and I'm also the founder of Global Health Intelligence, AMI's sister company. So when we look at hospitals on a global level, something that's really interesting to denote is that 3/4 of them belong to emerging markets. So out of about 100,000 hospitals globally, only about 25,000 are in countries like the United States, Canada, Japan, Europe, Australia, and others. So that leaves 75,000 hospitals in emerging markets. So if you're a healthcare company and you really want to grow globally, you want to grow on a global scale, you really need to consider emerging markets as part of that growth strategy moving forward. Now, if we look at the top 10 emerging markets by number of hospitals, it's no surprise to see that China and India are at the top of the list. However, what is really surprising is that 4 out of the top 10 emerging markets are in Latin America, specifically Brazil, Mexico, Colombia, and Argentina. So if you're a healthcare company and you're looking for long-term sustainable growth, you really must consider emerging markets as part of that strategy. And if you do so, you really must consider Latin America as a key element in obtaining that growth. And this is really important to all of us here today. This is why we are all here today. And this is why Latin America is so important when we're talking about global growth, particularly in the healthcare sector. So moving on, we spend a lot of time looking at the driving forces of change and the key drivers of change in Latin America and in healthcare particularly. And so for this webinar, we're going to look at 3 major forces of change. The very first one is the aging population. Secondly, we're going to look at the obesity epidemic. And finally, we're going to look at the lack of efficiency within healthcare systems. So as it turns out, on the aging population side, Latin America is the fastest aging population in the world. And what does that mean? Well, it means it's the fastest growing population of elderly people from now through 2055. It's estimated that by 2055, there will be 3 times as many seniors as there are in the market today. And as the population of seniors grow, so will dependency ratios, because people are going to be taking in their family, their parents, their uncles, their aunts, their grandparents, into their households in order to care for them. And also, as people get old, we're going to see an increase in non-communicable diseases, as well as chronic diseases, and that's going to put a lot of strain on the public healthcare systems. We're going to see limited resources from the public healthcare side. So we're probably going to see longer wait times in order to get procedures, as well as a decreasing quality in terms of the outcome of the procedures that are being performed by the public sectors. And that's going to push a lot of people to migrate towards the private sector healthcare in order to get quicker access to care and also higher quality. And as this happens, as the private sector grows, we're going to probably see an increase in terms of the consolidation of providers, as well as a vertical integration between providers and payers. And that's going to ensue to a growth in terms of the core conglomerates of private sector healthcare across the region. Next, we're going to look at the rise of obesity. Now, it's no surprise, and most of you already know, that Mexico is the most obese country in the world, affecting approximately 28% of the adult population. But Mexico is not alone in this. What we're also seeing is that all major markets across Latin America are also showing high rates of adult obesity, in the order of around 20%. So more alarming still than just the adult obesity rate is the penetration and the prevalence of child obesity. Because child obesity is going to have a great impact, not just now, but also in the years to come. Obesity carries momentum. It literally carries weight. And we're not going to be able to curb that growth rate or that growth of penetration in terms of penetration of obesity for generations to come. And what does that mean for healthcare and for healthcare systems? Well, similar to the aging population, we're going to see an increase in terms of the burden of care and the financial burden onto the public systems. We're also going to see a growing reliance on the private sector in order to meet these needs. And just a side note on the private sector, we're expecting the private sector healthcare in 2018 to grow by over 10%. We expect this trend to also continue throughout 2019 and years to come. But the obesity epidemic is not going to stop there. What's really fascinating is that it's also directly tied in terms to people and to people wanting to manage their health. And so we're seeing an active stance on behalf of populations to take active control in terms of their own health management. And we're seeing this rise, particularly through the use of mobile technologies, apps that monitor heart rates, apps that monitor your amounts of steps in a day, the amount of exercise that you do, your diet, the amount of calorie consumption, but also that monitor home care systems. So as we said earlier, the dependency ratios that are growing across the region, having more people within the household, is also pushing the technology that's used to monitor these folks within the home setting. Finally, we're going to look at the efficiency of healthcare systems. Historically, Latin America has been plagued with inefficient healthcare systems. Most of these were designed in the 1940s, and they've been really slow to adapt to modern day healthcare needs. But we're starting to see a shift in this, and we're starting to see a shift in the paradigm of healthcare, where we're moving away from just caring for the sick and the ill, but really trying to manage population health. And in doing so, we're talking ever more about value-based care and the use of technologies in order to engage people in their everyday health management. So with that said, these are some of the major trends that we're looking at in Latin America in terms of healthcare, but we certainly look forward to hearing from you in terms of what you're seeing in the market and some of the needs that you're seeing being met and being challenged. With that, I'm now going to pass the baton to my esteemed colleague, Lindsay Lear, who's going to talk about trends in financial services in Latin America.
There we go. I got okay. Thank you, Guillaume, very much. Hi, everyone. My name is Lindsay Lear. I am the leader of AMI's payments practice, and I'm very pleased to share with you today two major trends that we'll see consolidating over the next 12 months. One related to retail in-store payments, the other related to e-commerce. So let's first take a look at what will be happening in card-present physical retail payments. Over the past few years, we have seen a lot of experimentation in mobile payments and new technologies for retail. However, there has not yet been consensus on which technology will become dominant. Cash today still can represent up to 90% of retail payments, depending on the market. And so we have this battle between technologies, and we will see this heat up and perhaps a winner emerge in the next year. On the one hand, we have card networks, Visa, MasterCard, American Express, pushing contactless technology. They all launched mandates. Within the past 18 months, they've all launched mandates requiring all credit, debit, and prepaid cards issued in 2019 to carry contactless technology, enabling customers to simply tap their card and pay without friction. This, for the card networks, is the natural evolution of the payment card. It is the easiest migration for a customer in terms of upgrading their payment experience, and is the best way to combat cash. Now, contactless today is very emergent with less than 5% penetration of all payments. However, it has seen tremendous success in some global markets, including Australia and the UK. So contactless has the advantage, additionally, of promoting interoperable payments and promoting cross-border spend, as these networks are already very well entrenched in the region and globally. On the other hand, we have an increasing number of pilots and experimentation in mobile payments, specifically QR code technology. And we've seen these proliferate from different banks, fintechs, and other players in the past couple of years. None have made any real significant traction, but we may see some winners pull ahead of others in the next year. We've seen some exciting developments very recently with Mercado Pago launching QR codes and having some pretty exciting growth and traction in Argentina. The Central Bank of Mexico is explicitly supporting QR codes as we go into next year. And this month, very interesting is the fact that Tencent or WeChat made their initial investment in Brazil's digital bank, Nubank, which we don't know exactly what this investment will look like, how it will pay out, but WeChat's QR code platform has been enormously successful in China. Folks in Latin America have been waiting in anticipation to see what WeChat might do in Latin America, and this is their real first stepping stone into the region. So QR codes have the potential to improve financial inclusion in the region, as opposed to contactless cards, which are dependent upon a credit or debit card. QR codes enable folks to make a payment without necessarily having a bank account or a payment card. However, it will also, if QR codes pull ahead, it will result in greater fragmentation, because it is likely that in each country, one particular system will dominate over others, which will limit the ability for these payments to span across borders. So on the one hand, we have potential interoperability. On the other hand, we have potential financial inclusion. Certainly, there's potential for these two technologies to coexist, and that may very well happen. However, it's likely in the next 12 months, we'll really see a leader pull ahead. And who wins and loses relative will be dependent upon which of those technologies we see really getting more entrenched in the region. We can move on to the next slide. Within e-commerce, some really exciting developments have been occurring, and I'm personally am really looking forward to seeing what occurs in the next 12 months. I like to characterize this development as e-commerce in general and commerce in general moving towards a marketplace and open platform model across all verticals. We've seen this already happen with retail. So Mercado Libre and Amazon and others have brought the marketplace model to Latin America. Second, this occurred with taxi rides and ride hailing. We have both international and Latin American companies really doing well in ride hailing. Thirdly, what we're seeing now is this platform expanding into non-traditional verticals and some unexpected verticals, including grocery delivery, restaurant takeout, pharmacy, miscellaneous retail, and even cash delivery right to your doorstep. So consumers are, in more areas of their lives, learning to use the mobile phone as a transactional channel. This is putting increased pressure on incumbent retailers. This has been happening over the past several years, but in 2018, we've seen some very significant moves by leading retailers, including the purchase of Linio by Falabella, primarily to enter the Mexican market. Walmart has recently acquired the Chilean grocery supermarket delivery app Corner Shop. And OXXO in Mexico, while they're not moving to a marketplace model just yet, they have announced the upcoming launch of a delivery app, which is in a direct response to the competition they're experiencing from apps like Rappi and Corner Shop. So we'll see this continue to accelerate in going into 2019. To put this in perspective, it's important to remember that e-commerce represents only 3 to 5% of all e-commerce spend in Latin America. So we have to remember that this is still a very emergent segment. However, as Latin Americans can tell you, these applications are rapidly changing the way people think and behave when they're making purchases. So we can expect these disruptive trends to continue to change how people consume in the short and medium term. The major implications of these disruptors are several. First of all, they are blurring the lines between the physical and the digital, and importantly, obscuring brand names. When you log into an app to make a purchase, you are less cognizant of the specific merchant that you're patronizing and the brand of the product that you're buying. What is first and foremost in your mind is the brand of the app, whether it's Amazon, whether it's Rappi, whether it's Global. You're thinking about that brand name is what is your point of reference. It's also blurring the lines between payment methods. These are card-on-file applications. So when you save your payment credentials in the application one time, and then you're likely to forget which bank issued that card and which network is on that card. And really, that, once again, the app remains top of mind for you, which positions them to be very well to actually become a payment method in and of themselves. So we'll see these disruptors kind of advancing in the consciousness of consumers and encroaching on territories of both merchants and payment methods in the months and years to come. So thank you very much. I look forward to any questions you all might have and discussing these further. I'd like to now turn it over to Diego Rodriguez, who will take us through some trends in logistics. Thank you.
Thank you, Lindsay. I'd like to discuss with you and to share with you this afternoon 3 key trends that we have identified so far that will have an impact on the logistics industry in Latin America. And 2 of them are closely related to e-commerce. And the last one will be related to all different segments, e-commerce, pharma, high-tech, and automotive. But to begin with, I like to say that these trends are closely related to the intersection of logistics and technology. First of all, with the change of online consumer spending habits, the evolution of warehousing, the change in delivery preferences, the increasing number of returns, the search for improved efficiency, among other factors, are all serving in favor of the expansion in the logistics industry in the region. And the first trend that I like to discuss with you is how the maturing e-commerce is generating more returns in the region. Of course, returns are part of doing business in motor retail in Latin America. And depending on the type of e-commerce business, the return rate can easily go above 30%. However, this could be a profit-killing operation for some firms in Latin America. And for this reason, some companies start to limit the number of free returns, like is the case of Mercado Libre, to a few number per month. And also, other companies involved in the cross-border e-commerce don't even bother to ask customers to return products, since the shipment cost can become even higher than the same value of the product. Cross-border e-commerce today represents a vast opportunity for retailers, marketplaces, and SMEs all over the region, as we have seen with Mercado Libre, with Linio, with Amazon, by allowing them to access new customers, avid to find cheaper and better products in other jurisdictions. However, when returns are included in the equation of cross-border transaction, the opportunity becomes into a logistics challenge. Given this reason, online retailers are starting to pay more attention and prioritize and to evaluate the reverse logistics capabilities and flexibility that their 3PL suppliers can provide for both domestic e-commerce and international e-commerce. Also, this represents a great opportunity for 3PLs looking to move further upstream in the relationship with its clients and to extract more revenue from their customers. To continue, moving on to the second trend, I like to share with you how warehousing is becoming more automated in Latin America and the impact of data analytics in the region. E-commerce is moving warehousing closer to its customers inside large regions in the region to help reduce fulfillment times. As buyers increasingly prefer to purchase product online, fulfillment plays a key role to get goods as fast as possible to the client's doorsteps, which in turn, of course, favors the 3PL market for outsourcing inventory management and other high value-added logistics solutions. Also, we need to take into account that to survive the disruption revolution, some of the logistics operators in Latin America, as well as logistics buyers, are starting to shed unproductive assets. They're lowering their headcounts, and they're focusing on moving further upstream in the value chain by commanding the customer tower, so they can better understand business requirements and offer superior service to their clients. If we discuss the impact that the whole big data and analytics market will have on Latin America, I like to focus on the use that some of the logistics players in the region are implementing big data and analytics. According to Frost and Sullivan, the whole big data and analytics market will increase threefold to almost 9 billion by 2023, up from close to 3 billion today. This is very important because logistics companies will be greatly benefiting from this trend. To give you an example, UPS and DHL are using software that analyzes how the vehicles that make up its fleet are operating. They're registering information about the number of stops per day, the delivery times. They're distinguishing the most efficient routes. They're also calculating the usage of fuel per route, if the units are complying with the itinerary or if they are deviating. And all of this information will basically boost the efficiency of the business operations of the logistics companies, and also will help them to provide a better customer experience to their clients. Also, I like to discuss moving on, the last trend in Latin America, which is more general. I like to share with you how logistics customers strive to cut costs, and I like to share with you what is triggering, or what are the factors triggering the search for new logistics vendors within Latin America. Traditionally, Latin American-owned firms used to be distrustful of outsourcing high value-added logistics services. However, for companies in rapidly growing segments like e-commerce or pharma or automotive and medical equipment, the outsourcing of supply chain management functions are enable them to focus on what they do best: marketing and selling their products. Also, we have seen how these companies, especially large multinationals in countries like Mexico, Brazil, Panama, are changing the way they use assets, and they're getting rid of underutilized vehicle fleets, warehousing facilities, and big inventories, and they're moving to third-party managed facilities. They're also testing warehousing sharing platforms. They're partnering with computing firms to find backhaul opportunities, and they're also implementing more drop shipping strategies, all of them to focus on reducing logistics costs. All of these trends, of course, favors those 3PLs willing to invest in these changes required to transform and adjust their operations to these new realities in Latin America. Buyers today, not only in e-commerce, but across different industries, and that's the spillover effect that we have seen from the e-commerce in the region. In other industries like pharmaceuticals, medical equipment, buyers are demanding quicker responses and newer operational approaches that require leaner and more flexible business structures. To sum up, we expect that 2019 will bring even more competition into the market and somewhat lower margins in the industry. And having said that, I'd like to pass the word to Mauricio, who will be sharing with you the trends in the consumer and goods practice.
Thank you, Diego. Good afternoon, everyone. I want to talk about the consumer and retail trends that we're seeing, and most important, I'm going to be looking at the long term. When I do short or long-term planning, I always look at two indicators. The first one is the consumer sentiment index that basically reflects, outside of the political environment and on the macroeconomics that John presented, this represents how the consumer feels, how that economy is flowing into their pockets. When you see that the consumer is confident, is optimistic, they are in a spending mode. That means that they are willing to pay for big ticket items like cars, refrigerators, electronics. They are looking for experiences. They are looking for traveling. They are looking for premium products, right? Because they feel very optimistic. And the good news is that we are projecting for 2019 that most of the markets in Latin America are going to be in that side of the equation. Conversely, when the consumer confidence is lower, consumers are willing to save. They are more concerned of their spending, and basically they are looking for, they're willing to sacrifice experience for price. And this is an opportunity basically for warehouse clubs, private labels, and unfortunately, it's also an opportunity for a gray market and copycat brands. The second one, can we move to the next chart, is I always like to look at the macro trends, what is impacting our business. And this is very important because today you read and there are so many macro trends and it's so hard to identify those that really impact your business. So all managers need to be really focused on what it means for them, what implication for their specific business. So the ones that I'm seeing that are impacting the consumer in general terms is, as my colleagues mentioned already, the consumer is always on. So we have a much more educated consumer, a more demanding consumer, and knows what's going on. We're also seeing a trend in terms of obesity, right? So consumers are becoming more health aware. Consumers also are aware of what's going on with the world and with the global warming and those type of things, so they care about authenticity. So that is changing in general terms how the consumer is behaving. And Lindsay mentioned about e-commerce, right? So everyone talks about e-commerce, but what it means for the consumer? Well, basically what it means is that the consumer decision journey has changed. Before, you have a need, either you're the consumer or the shopper, you go to the retailer of your preference, you buy the product, you get it home, and that's it. Today, that has changed. There's an omni-channel that the consumer might be at the store, checking prices, checking competition, checking other things. They might go home, they might order online, and they might even order it in a different store than the one that they check the price. So those type of things need to be considered, and that's why the big data analytics is so important for every single company to look for. So for me, the traditional business models don't work any longer. Basically, what we're seeing is that consumer and companies need to start thinking in a different way. Companies need to start thinking strategically. Can we move to the next chart, please? And what I'm seeing as the big things that need to happen both in the consumer and retail businesses is boost productivity. Diego just mentioned about everything related big data analytics, right? And you do have that on the supply chain side, but that needs to be taken all the way to the consumer. Innovation, it's a critical piece of every company. In the old times, innovation was a line extension. Today, innovation needs to bring breakthrough. The best example I can think about it is the recent acquisition of Coca-Cola from Costa Coffee in the UK. They acquired 14,000 stores. Now Coca-Cola is going to start competing with Starbucks. That's going to be an interesting fight, right? Targeted marketing is so important. With all this data, it's important to create clusters and communicate with those clusters in a way that is really relevant to them. And as I mentioned, consumers care about the world. They care about what's happening. And all the research that we see indicates that consumers are looking for companies that behave properly, that are taking care of the society, that are taking care of the world that we live. In these days, having a corporate and social responsibility is not optional. Every single company needs to have one. And the last one is agility. And agility doesn't mean gymnastics. Agility, it's about rapid learning. It's about fast decision making. It's about how fast you can get a business decision into the market in a scalable way. Just think how entrepreneurs think and they get things done. From the retail, the strategy they need to think is having a hybrid strategy. Everyone talks about e-commerce, how fast it's growing, and it's going to be the fastest growing in the future years. But e-commerce, as Lindsay mentioned, it's only about 3 to 4% in Latin America, and in developed countries, it's around 10%. That means that the brick and mortar stores are going to be there and are going to be there for the long term. Therefore, retailers need to think on how they personalize the experience, how they make it work omni-channel, so they sort of connect with the consumer and they create a clear proposition. As Lindsay was saying, if I'm going to buy a TV set, where should I go and shop it, right? So first is the brand, first is the company, and second is the brand. This is where consumer and trade start blurring and start overlapping, and then companies need to think in that direction. Promoting a healthy lifestyle, if you're in the retail, you have to make it feel that way in all the environment, the product that you use, the product that you sell, the labeling of your product. It's a critical piece of inviting consumers to feel comfortable about the store. And the last one that is very important for companies and retailers to think about is trying new products and testing new models. The best one I can think about right now is something I read last week. In the 3 main fashion capitals of the world, Beijing, New York, and London, there's this new concept emerging, which is basically fashion for rent. Okay, that makes me think that, what? So in the future, are we not going to be buying clothes but renting it? And if that's the case, the future of fashion might be dry cleaning, right? I mean, that's going to be the business of where things happen. And what is the impact of that to the environment, right? Also, this made me think on what's going to happen with fashionable, affordable stores like H&M and Zara. Are they going to disappear as Blockbuster disappear as a result of Netflix? So these are just some of the questions that any planner and anyone thinking in the business for 2019 and beyond need to start thinking. The economy is going to be helping us, but strategy needs to be there. So having said that, thank you for your attention. I'm going to pass now to John. So he's going to talk about natural resources. Thank you very much.
Thank you, Mauricio. I'm going to pause just for a second to remind, a lot of people have sent in the question as to whether they will be able to access the full recording, someone who entered late. Everyone who registered for this webinar will receive in a couple of days a link, and that they can watch themselves the entire webinar recording as well as share it with others. So please be assured that this is recorded and will remain accessible for a long time. We are officially at our 1 hour mark. we're going to continue. We're going to continue the webinar. We chose the lunch hour specifically in the East Coast and much of the Americas precisely. It's because people have a little more flexibility in their time. I want to give justice to the content that remains, as well as leave time for questions and answers. So let me address the slides that were prepared by Remy in our natural resource. Our natural resource practice embodies three areas: mining, energy, and infrastructure, excuse me. What these three areas have in common is they all are susceptible to political risk and other types of risk that are really paramount to any large physical investment. In mining, and some of you will be in Lima next week for the big conference where Remy and I will be speaking. But in mining, since mineral prices fell in 2013, there has been a ground change in the attitudes of national host governments. As they saw mining projects disappear, get canceled, they realized just how beneficial these projects were, particularly to the development of some of the poorer parts of their countries. And so we've seen a real change in attitude in governments such as Ecuador, Brazil, Colombia, Argentina. But one of the, where risk has changed its focus in mining in Latin America is away from the Ministry of Mines and the national government and much more towards local communities. The local communities, as you know, in Latin America, have often had friction with their national governments. They've often felt neglected. Mining jurisdictions traditionally are some of the poorest parts of these countries. And in a fiscally challenging period that we've lived through over the last 4 years, the lack of trickle down of royalties to local communities has gotten worse. Couple that with the fact that local communities now have their own smartphones and their own ability to transmit images through social media to the global audience. Couple that with the fact that the unpopularity of national governments means that the likelihood of a national government using any sort of heavy-handed tactics to police local community opposition has also weakened. And what you have is a kind of a gap of governance in a lot of these local communities. And you've seen a growth in referenda. Now, I mentioned in Colombia that the federal government is sort of fighting back against this, and the constitutional courts have just passed a law basically limiting the stoppage effects of these referendum. But the fact is that you have local communities, whether they have the power to legally stop a mine through referenda or not, they're upset. And miners need to understand that, and they need to take that into account when they are pricing out or valuing a project. They need to take into account the time and money it will take to win the hearts and minds of those local communities. So that is what our clients are dealing with right now in this sector. If we can go on to the next. The next slide, which I believe deals with energy. Okay, in energy, of course, in the energy sector, low energy prices put a stop to a lot of projects. You had some more expensive exploration activity in offshore in Brazil, offshore in Mexico, for instance, that was put on hold. Now we have a price floor somewhere around $65, $70 a barrel. That makes a lot of Latin American oil fields more viable, including exploration activity. So you see a lot of interest, and not just from the traditional big players, but also Total of France and Qatar resource companies are showing interest and bidding on fields in Brazil, etc. What you have also is a new political landscape. We have a new president in Mexico. We'll soon one have in Brazil. We have a new one in Colombia. These are all important oil jurisdictions, oil and gas jurisdictions. In Colombia, we see a clear support for the sector. In Mexico, it is still not certain exactly what AMLO's plans are around Pemex. Of course, he comes from a 1970s pre-political formation when Pemex was in its heyday, a very wealthy oil company capable of doing anything. Today, it is a bankrupted oil company with very limited capital to invest in things like downstream refinery. So the jury is still out as to how pragmatic AMLO will be around Pemex policy. In Brazil, I mentioned that some of the advisors to Bolsonaro would like to privatize the remaining state ownership of Petrobras and Electrobras. However, we believe that there are also strong economic nationalists that are against that. So again, the jury is still out. In Argentina, there is clear national support for the development of Vaca Muerta and other forms, as well as fracking of gas in Argentina. So we see investment pouring in there. One of the most exciting areas that doesn't get a lot of press is Guyana. Guyana, Exxon discovered $4.5 billion of offshore oil there. And Guyana, which has no history of oil and gas production, has no service companies to support Exxon. So there is now a rush by service companies from Trinidad and other areas to support Exxon, and there's a bit of a gold rush mentality in Georgetown to build out the necessary infrastructure there. So those are some of the exciting areas that we're seeing in energy. Let's go on to infrastructure. In Latin America, there is a woeful lack of infrastructure built from a deficit of spending on infrastructure over the last 50 years. However, the fact that you lack infrastructure does not necessarily provide the environment to invest in infrastructure. And as I've alluded to before, the public finances of many Latin American countries do not support much public spending in infrastructure, which means that most of these governments have already developed or are quickly developing PPP legislation to encourage private investment in infrastructure. And now that the Lava Jato / Odebrecht scandal, which has implicated construction companies in places like Colombia, Peru, Panama, and the DR, as well as Argentina and even Chile, those accusations have either led to fines or have led to some form of resolution. And now we see the banking community beginning to feel comfortable that they can project lend again to these construction companies. Now that we have new leadership in Colombia, and we will soon have new leadership taking the reins in Mexico and Brazil, we believe that sometime mid to late 2019, we will begin to see strong growth again in infrastructure investment. Starting in places like Peru and Colombia, but also eventually in 2020, really incorporating some interesting investments in Mexico and Brazil. So that concludes the natural resource sector slides. And I'm going to just spend a couple minutes summarizing where we are. At the beginning of the webinar, we talked about the fact that Latin America is entering its third year of gradual recovery with a fair bit of runway ahead, thanks to still historical low interest rates, slightly gradually rising commodity prices, a stronger confidence level amongst Latin American investors, and a very strong US economy. The 2018 elections should lead to pro-investor policies, perhaps not as pro-investment as we would like to see, both in Mexico and Brazil, but certainly an advancement upon where we were. Latin America will largely escape the ill effects of US protectionism. In fact, the Chinese-US dispute is creating some short-term substitution opportunities both for South American agricultural producers into China, as well as Mexican producers of hard goods in the United States. What was talked about by many of my practice director colleagues was the incredible pace of disruption in logistics, in healthcare, in payments, in e-commerce, in different consumer service fields. And this will continue to represent a new form of competition. And that competition, coupled with a relatively strong dollar, will limit the US dollar upside growth of most companies. So companies are looking for growth, but Latin America will deliver profit growth to those companies that are smart enough to not only pursue revenue, but also cost cutting and remodeling their business to address these disruptive demands. At this point, we're going to open up to questions. Many of you have posted questions, and I know we'll try to address as many as we can in the next few minutes. We make a promise to you all that we will answer the remaining questions with a written response within the days ahead.
Yes, absolutely. We still have a lot of people with us. It makes us think that maybe we should do part 2 of this forecast at some point, just because there's a lot to cover and there's a lot of interest there. In terms of the questions, we also have a ton. So as John mentioned, what we'll do is basically address the ones that we can now briefly. And then after that, we'll prepare written responses and send them to all the attendees from all our different panelists so they have the answers to those questions. But to address a couple now, one of the ones that came up from 3 different people was about the China-U.S. trade dispute. So the question there is, how will it affect things in Latin America? So I think that would be a good question to address.
Sure. Short term, it's an opportunity. There are real subsidies. Brazilian soybean exports are up 22% this year, precisely because the Chinese refuse to buy from the Americans, or rather the cost of doing so has gone up, and that provides an opportunity to Brazil. There's opportunities for Mexican manufacturers to supplant Chinese supply in a lot of areas that are now suffering 25% duties going into the United States. The longer term, of course, a Chinese-U.S. trade dispute that becomes a trade war is a danger to the entire global economy, and that would hurt Latin America as much as it would hurt any other part of the world.
All right. Now we have another question that's specific to Brazil, and that question is, what effect, if any, will Bolsonaro's privatization efforts have on Brazil and the region?
Well, I think a lot of noise has been made about the privatization of remaining. The state still owns, I think, 49% or if not 50% share of Petrobras and Electrobras. That would create a more buzz than I think actual significant change to the economy. But it's more about taking a controversial stand on a very pro-investment position that bodes well for the far more important but much more difficult to pull off reform of Brazil's pension system, which is something they desperately need to do. So privatization to me is in amongst itself is not a huge impact, because most state assets were privatized years ago in Brazil. But as a indicator of where Brazilian policy is going around larger, more significant issues of overtaxation, too big a government, and overregulation, it's an interesting weather main issue.
Gotcha. And now there's another question specifically on the logistics side. This one is, how will the Uberization of cargo and logistics impact LAC logistics?
So we have seen with CargoX, with Guru Cargo, these startups are basically Uberizing the first mile. And we have seen similar disruptions in Mexico, in Colombia, in Argentina, in Chile, and they're gaining traction really fast. So what we recommend is that 3PLs and logistics providers do their job and do research about how to work and how to leverage this new operating model, and how they can integrate the Uberization of cargo within their own operations. Because we have seen a rapid growth in Latin America, specifically because the trucking industry is highly fragmented in Brazil, in Mexico, in Colombia, and there is a great opportunity for logistics operators to consolidate the trucking industry by leveraging the Uberization of cargo.
All right. Now we have a specific payments question. If you bear with me, I'm going to just read it off my other screen here. This is for Lindsay. Do you think cross-border payment processors will grow in the scenario of 2019, mainly because they facilitate the entry into Latin American markets?
Yes, it's a good question. So e-commerce across the board is growing around 20% in Latin America, and cross-border represents a very decent chunk of that, 15 to 20% in general. Now, we have seen in the past couple of years several innovative companies popping up specifically dedicated to facilitating cross-border payments for very often digital companies that don't want to open up their own legal entity in each individual market. These companies have had tremendous success because they're filling a market need. Silicon Valley companies who know that they have a captive audience in Brazil, Mexico, Argentina, but don't have the resources or the bandwidth or the interest in actually setting up shop. These companies are facilitating their market entry. So companies like eBanks, like dLocal, Alpago, PayU, several others are taking advantage of this trend. That will continue to grow. It's also becoming more competitive as more and more companies crowd into this space. So they will have additional competitive pressure, but for sure it will continue to grow next year.
All right, now we have one final question here for consumer. This would be from Mauricio. I'm reading off another screen, so bear with me. What is the projection for the tourism industry in Latin America? Talking specifically about travelers from Latin America to other countries, not travelers going to Latin America from other countries. So I guess it's inter-regional tourism. I guess that's the question, is what the projections are for that.
Well, that's a very specific question that I don't have an answer to. I don't want to lie. I mean, what we're seeing, again, based on the consumer optimism, is when the things are positive, consumers are willing to travel, right? And they're going to be willing to travel internationally when the economy is good. If the economy is not that good, they are going to be willing to travel within the country. That will be my answer, and I'm sorry I don't have specifics on that subject.
That's okay.
I'd like to add to that point, Abel and Mauricio, that we have seen a growth in the travel industry intra-region in Latin America, specifically Mexicans traveling to Colombia or Colombians traveling to Panama. So we have seen increased tourism numbers in those countries, to the Caribbean as well. But we have also seen a decrease in the tourism to places like the US or Europe. So that, to add some flavor to that question.
All right, and I guess to wrap up, because I think this is kind of germane to what's happening in the United States, somebody had asked us here, how could the midterm elections, or if they can, the results of these midterm elections in the United States, could they change the forecast for LatAm? So I don't know if that has an impact. John, you might want to be able to weigh in on that.
Yeah, though I did mention this a little bit in the Mexico analysis. We have a new NAFTA, the USMCA. It needs to be ratified in all three countries. It should be ratified without difficulty in Mexico and Canada. And in the United States, if it were voted on today, it would also be ratified. However, we're going to have a new Congress. There is a waiting and study period that is mandated in the U.S. Congress, so they cannot vote on it before the midterm elections, which means it won't be voted on until January when the new Congress sits. And there's a good chance that the Democrats will dominate the House. And not only that, but the blend of Democrats will shift leftwards, and that tends to be an anti-trade sentiment. There's also a pretty strong sense of revenge within the Democratic Party in U.S. politics. And so will they use this treaty as a way to sort of punish Trump? So these are the lingering doubts. And so certainly for Mexico, there is risk associated with the U.S. midterm elections. The rest of the region, I don't believe so.
All right, I think we're going to have to wrap up now because we're already 20 minutes over. So those are all the questions we can get to momentarily. But what we'll do, as John said, basically is sit down and have more thought out, written out answers to these questions, which we'll provide you within a week or so, as we usually do after our webinars. Tomorrow, what you can expect to arrive in your email is going to be a link to the video of this webinar, as well as the presentation slides, so that way you can watch it again at your leisure or go through the presentation to get a key data points. We have still an amazing amount of people still with us, and we're very pleased that you've had so much patience and have hung in there with us. And hopefully you'll be able to join us for a webinar in the near future. Thank you so much. This is going to conclude our 2019 forecast for Latin America. Thanks again.
Thank you.